back to another week in review. We're going to be looking at the trading week of October 6th, 2025. We'll get data out of the way here to start things off. So first thing, the government shutdown right now is affecting some of the releases of data. I'm not sure which this week. Obviously it's a developing situation. I don't know if some of these are not going to come out. I really don't know. So taking all this with a grain of salt, at least for what's expected on what's coming out this week, but we'll go through. Monday, we don't have anything major scheduled. Tuesday, starting at 10 a.m., we have Fed speakers basically the majority of the day. Wednesday, again, we have Fed speakers a lot of the day. 10:30, we have crude oil inventories. 1 p.m., we have the 10-year bond auction. 2 p.m., we have the FOMC minutes released. So the big thing on Wednesday, I think, as far as from a volatility perspective, would just be the minutes release. I don't think there's going to be anything new in there, but obviously, algos kind of take over when that stuff comes out. So just being conscious of that in the middle of the day. Thursday, we have jobless claims. Again, I don't know if those are coming out. I assume they are, but we'll have to see. And then we have Powell speaking at 8:30 a.m. So in the pre-market, just have to be conscious of the fact that Powell is going to be speaking. 1 p.m. Thursday, we have the 30-year bond auction. Friday, this is where things get a little weird. We have the unemployment change, unemployment rate, and potential NFP release next week scheduled for Friday. But again, I don't know if this is just a placeholder for the shutdown, or if it's going to be, or if we actually get it. So just keeping that in mind. I'm sure obviously things will be announced well before they're released, if that's the case. So we'll just keep that in mind. And then 10 a.m. consumer sentiment and inflation expectations. These should be released. These are University of Michigan's. These are not related to the shutdown, as far as I know. So we should actually get those. So getting into last week, we'll start with the S&P 500 futures here. Pretty crazy week as far as what we saw. Started off pretty slow, very grindy, a lot of consolidation on Monday, Tuesday. Wednesday was a wild day. Wednesday was a big overnight liquidation after that big spike up on end of quarter markup, and then obviously the October open on Wednesday turned into a full-blown trend day higher, multi-distribution trend day higher, which led to consolidation and a really gross session on Thursday, and then Friday printing new all-time highs, closing outside balance, closing the week outside of prior balance into old highs. So pretty significant things happened last week. The one thing I'll say here, and to start this off, is that as far as higher time frames, weekly, monthly are all one-time framing up. Actually, weekly, monthly, daily, on the S&P 500 are all one-time framing higher. So when I start looking at this from a bigger picture perspective, objectively, obviously the bigger auction is being controlled by buyers. And if you watched the video last week and you were paying attention there, my thoughts were we had buyers controlling this auction above 66.80s, and I was looking to remain long above 66.80s. From a bigger picture perspective, that's still the case. So there's two conflicting things happening here. So the bigger picture for me is that anything above 66.80 is going to continue to look for higher. So what that means is that as far as my equity ports go, I'm going to continue remaining long, and I will continue holding, those equity positions. The larger equity positions remain long for me above that level. In the short term, I think there's potential for a pretty decent pullback up here. I'm not looking for, a market crash. I'm not looking to call a market top. I never look for those things, but what I do look for is potential periods of volatility and pullbacks, and I have algorithms that I've coded that are looking for those things. So the big thing that happened for me on Friday was those blueprints you can see up into the highs. So when I see these start to print, it puts me on guard for looking for straight continuation directionally. And what these look for are reversals on higher time frames, and basically a larger return to mean is what this really is. So this is looking for some higher time frame mean reversion. I'm not going to go into detail about how this works, but basically, when I see these start to print, I start to pull back a little bit from being aggressively one-sided directionally on the tape, and I start to consider the fact that this is telling me pump the brakes a little bit and you could potentially be seeing a pullback. What happened on Friday was also significant. So the first thing is we actually did close outside prior balance. So that is a positive for buyers in the short term. We framed weekly value higher. We shifted weekly POC, so weekly acceptance or weekly VPOC and highest volume traded price up into the highs. But we do have a neutral extreme day and a down close. So neutral extreme days can present changes in short-term auctions. So basically we have buyers and sellers breaking both sides of IB, testing both sides of IB, and we close on one extreme of IB. So basically the way that I look at this in the short term, especially combined with the fact that we're seeing blues start to print, is that sellers are potentially taking control in the short term. And it could also not necessarily be, quote unquote sellers, because I don't love the term buyers and sellers when we're talking about auction theory, because we don't know who's actually participating in these auctions. But what it could also be is profit taking. It could also be overextension and exhaustion and buyer exhaustion, which is more likely based on the tape on Friday, at least in my opinion. And this can lead potentially to some pullbacks. So how I'm going to play this week is fairly straightforward. The big thing for me is Friday's low. So these have printed. We have a neutral extreme down close day. This, to me, in my opinion, on Friday, this favors directional continuation lower for a pullback. The other thing to consider here too is when we start looking at the yearly, we're slamming up against 2 deviations away from yearly mean again. And you can see anytime we get into this extension, we start to pull back in the last few months. So it happened in July, happened in August, it happened in September. Same is true on NASDAQ. We'll talk about NASDAQ after. But again, when we start getting this extended on the yearly, we can potentially see some pullbacks start to form. So that puts me in the camp of looking at Friday as a potential short-term change. So if we lose Friday's low, if we're starting to offer below 57.54s, this would likely come from an offer back up into 67.70s. So if we start to lose 67.54s, I'm going to look to be a seller. And I'll look for this pullback down into the base of last week's value. So we have an anomaly that we need to correct down at 67.32. That's the first target below Friday's low. Well, I guess technically first target would be Thursday's low, ETH low down here, but I would be looking for 32s to get corrected. This would also backfill all of the single prints and backfill value from this big, huge, nasty structure trend day higher. So if we start offering below 54s, I'm going to look for 41s, 32s, and I'll look for the base of last week's value down into 67.10s. So I'll be a seller on the loss of this low intraday, looking for basically last week's profile in this big LVN here to get backfilled, and look for some consolidation and some decision making down into 6700s. Technically, these blues complete down into about 6690s if we're looking at it from where it gets satisfied from what the conditions are on that. So we'll have to see if we actually get back down into that low. I'd be a dip buyer if we start to put in good lows down into, again, that big pivot I pointed out, 66.80 to 66.70s. This is also going to be where the 20-day simple moving average starts to move up into, because this is going to catch up, obviously, right? So this is also going to be potentially just a simple mean reversion back to 20-day simple moving average. That's not what these blues actually look for, but everything would actually kind of line up that this area, again, is going to be critical. If we start getting below 66.60s, then we have potential probably for a fairly decent correction down. And when I say that, I'm talking probably 3 to 5% correction down if we start losing 66.60s. So I'm not necessarily looking for that just yet, but I think as far as where I sit on this, there's enough warning signs from Friday, in my opinion, that we could see a potential really nice backfill, really nice short trade back down into the base of last week's value, and below this potentially into 66.80 to 66.60 down into this range, and we could potentially form a nice low down here for another dip buy. We're going to have to see how that develops as it happens, if it happens. So going to keep that in mind. Where I'd be long biased, basically right off rip. So if we see if we see Friday's down close neutral extreme day get completely negated and we start getting above last week's value, basically bidding 67.80s again, which was pretty heavy on the tape on Friday and Thursday, actually. If we start getting above 67.80s, then it's going to be longs for me. I'm going to be looking for a move. Obviously, last week's high would be target 1. Target 2 would be 68.30s. That's how I'm going to look at that. So NASDAQ. NASDAQ has been considerably weaker the last couple of days. Obviously, weekly, monthly are still one-time framing higher. The daily has shifted to balance as of Friday. So we're in a four-day balance range as of Friday, and we also closed below prior all-time balance, prior all-time highs, prior balance highs, closed below Thursday's low, and it was quite heavy all day on Friday. And again, this could potentially be potentially absence of initiative buying, potential pullback here is in the works. I don't have blueprints. Obviously, I had blueprints print here as well. These got negated on this daily close, but then we actually fired them off again, and then we had this huge sell. That's one thing I'll talk about too. So the way these blues work is they get negated on a daily basis, negated or validated on a daily basis. So if we end up closing ES above those blueprints on Monday, then they're negated, and I don't consider them valid anymore. So that's just how those work. So NASDAQ's going to be basically the same thing. Obviously, the pivot is going to be the same here for NASDAQ for me. If we start losing 24,920s, then again, I think we backfill all of this range back into the bottom of this value area low from this Wednesday trend day up. We go back to last week's POC, which didn't actually shift on the NASDAQ, so 24,830s down into this low. And if we start getting below 24,750s, this is a very critical pivot in the short term for me. That I think what we're going to do is go all the way back down to 24,630s to this naked POC on the daily at 24,600s. And again, this is where the 20-day simple moving average is going to catch up. It's also the FOMC day high, which has been a critical pivot as well. So potential, I think, under 24,900s to backfill last week's range, and then below 750s, I think we're going straight down potentially into 600 to 550s. So, and again, I'd be a dip buyer here if we start putting in really nice lows, and if we start to puke below this, then obviously I think the same thing is true for the NASDAQ. We're going to be looking at a bigger correction down in the short term. So I'm not bearish on the market. I just think there's enough things telling me right now from my system, as well as just general auction theory, that there is potential here that we could pull back, and I think it's prudent to just take those things into consideration here. And I think obviously the signs will be, if we start losing Friday's lows, then I think the idea of a potential pullback and then dip buy at some point is what I'm looking for. So if the market says, fuck that, we're going higher, and we just immediately rip and we start getting back above 6780s, then this view is wrong. This day gets negated, and buyers are still in control, fully control on every time frame, which they are still currently now, but they regain full control, and they negate Friday's weakness and Friday's neutral extreme down close day. So gonna keep it simple. Quicker video this week. Hopefully this helps. If you like the video, please subscribe to the channel if you haven't. And if you have any comments or questions or comments, leave them down below. I appreciate your time. Thank you very much.